I'm Corbett Wall with DV Auction, here with the cattle market summary for the week ending October the 12th, and releasing this at an awkward time. I apologize, I missed the last couple of feeder flash visits with you end of the week there. Went out to Virginia to give a talk, and that dang Hurricane Michael got up there and messed all the connections on your flights up and ended up holding me over there a lot longer than I intended to. But we'll try to catch up with everything that happened this week, and there was a lot that happened this week. We're in the spot month, and your board was not coming right true with what the cash market is. It was selling at a premium, so that brought delivery process into the games, which there's a lot of games being played on your fat cattle market. But you saw that $1.11 has been the market for over a month now. And your packers have been playing a lot of games because it kind of felt like we're in a bull market with knowing that we got higher prices coming down the line, that they were doing a lot of things to try to keep the market from getting any higher and hold it where it is, because their cutout values have been drifting lower for the past several weeks, and those huge margins of $300 plus have backed off where maybe just $100 a head or a little over that. And any cattle feeder would love to see that kind of a margin on their deal, but the packers have been used to making a whole lot more than that. But we saw them doing a lot of things to try to keep the market steady, paying a steady dress price, and then going and getting the cattle instead of having them delivered to the plant, and then a lot of times putting $3 or more freight on those cattle, which would have been a whole lot higher in the market. But since they purchased them and then went and picked them up, it kept that market to steady. And we just seen a lot of ploys wait until Friday late to trade anything to keep that market from going up. Well, when you enter the delivery game in, that just makes things a whole lot more interesting. And we talk about delivery. Some of you may not be familiar with that. When you have a futures commodity market, it tells you what the price should, or what people think it is going to be down the line quite a bit. But whenever that period comes to fruit, and you're in the spot month, or that market has matured, then your board should be right in line with what the cash market is. And if it's not, then a lot of times you will have the actual physical product come to deliver. And you see it a lot with the grains. That's one reason that the grains market stays so true with the board and the cash are always right there together, because it's not a big deal to deliver grain. You've got your specs on it, and they have places where you can deliver it, and it just happens, and that keeps your board on your grains very, very tight. We don't see it all the time with live cattle. Feeder cattle, you can't even deliver them anymore. They went to a cash index, kind of like they did on lean hogs, because it was too much of a problem with the way things are traded. But you still have live cattle delivery. That's why they still have a lot of volume in your live cattle contracts, and it does have a bite to your board there. But we come into this past week, and we saw that your board was $3 or $4 higher than what your cash market was. And in the fall of the year, you'll see that, and you'll start seeing a few deliveries because you've got guys that have hedged cattle or sold cattle on the board, and they think, hey, I'd kind of like to have that price there. I think I'll deliver them. And then you have different people that might take delivery of those cattle. You might have people that are speculating on them because down the road we see higher prices for live cattle on the board, so it makes those people think maybe I could take delivery of those, maybe bid them back on feed, hold them together a little bit, and speculate and make a little bit of money. You might see some hedgers, some commodity brokers. They might come in there, if they're handling a whole lot of customers' hedges, they may go in there and take delivery of some cattle just to bring that board together a little bit and make that basis more true for their customers. And in an odd case, which you saw this week, you might see the packers come in and actually demand some of those deliveries because they want the cattle and get rid of them that way. In a perfect world, they would be long hedged, because knowing that they needed cattle, and then they would take delivery like that. But you don't see them do that very much because it props the board up. But we did see some deliveries come into play this week. I had 94 total loads all on a live basis there, because it gives you more options on those. 73 of those were heifers, which it's only been here lately that you could even deliver heifers, because they age physiologically a lot faster than steers do whenever they had become pregnant, if they had, and if they'd sloughed a calf or something like that, or aborted one. And so that has come into play now, because heifers are just basically the same as steers now. And a lot of people push to have heifer delivery, and you saw more heifers delivered this time than you do steers. So that's going to come into play more. But you saw a lot of rumors going around, a lot of people getting excited. You saw some deliveries there that were demanded by packers this week, as I mentioned, and then some of the other packers that might have bristled them up a little bit. You know, hey, what are you guys doing over there? You're kind of tipping our hand, showing that we actually want cattle and need cattle, and you're messing things up. We could have offered some cattle for delivery out of our feedlots that we're aligned with, and then reclaimed those cattle at a little bit of a bonus that the guy that's going to get delivered on has to pay. And there's just a lot of games being played around there, and we saw a lot of those coming out this week, and it was kind of like a cattle market soap opera there a little bit. But let's look at the board. Your October live cattle futures on Monday were up 37 cents. Tuesday was down 82. Wednesday down $1.27. Thursday up 55. Friday down 30. And your live cattle October contracts ended the week at 112.32. That was down $1.48 for the week. December lost more than that, almost $2, $1.98 to end the week at 116.17. And some of our big eyes for down the road are starting to back off a little more. Instead of people thinking that this fat cattle market's going to go to $1.30 before the end of the year, they're thinking we might be lucky to get it into the $1.20s. But who knows? We haven't really saw our supplies tighten up enough to really gain ground. But October feeder cattle, Monday was down a dime, Tuesday down 72 cents, Wednesday down $1.05, Thursday up 82, and Friday down 202, with your October feeder cattle contracts losing $3.07 for the week at 154.70. November contracts lost $3.60 for the week to end at 154.62. Your cash fat cattle trade happened a little bit earlier in the week, and the delivery process spurred that on a little bit. So we saw steady money, $1.11, and actually we were kind of lucky to get that this week. It wasn't the other way around. This week people were thinking we were probably going to lose a buck, because when they started tendering for delivery, that is not necessarily bearish on your market, but it brings that board back true. It brings that basis, that negative basis down, brings that price on the board closer to what your cash market is, because you have the longest of the longs that bought the contract. You see them scrambling to get out, because they really don't want any cattle delivered at the front door. And so they start getting out, and that triggers a sell-off, which that brings your basis back down. Well, the basis coming back down did help some of your hedged cattle feeders a little bit. So the delivery process did what it was supposed to do. It sucked your board back in a little bit. But then when you saw that there were actually some packers demanding some of those delivery loads, then that was a bullish factor. But that happened kind of after your trade had already happened. But still, there's a lot of things that go into it. But we did have a $1.11 trade pretty much everywhere, and we just saw a few in the Northern Plains earlier in the week than that. And then we did see that some of your mixed loads and your off-quality loads in the Southern Plains that usually go along at the top price, because they finagle that around, you know, well, I'll sell you, you know, 10 pins here, but you're going to have to take this pin of junk over here at the same price. Well, this week they didn't take it at the same price. They took the 10 pins at the steady market at $1.11, but if you had a pin of mixed junk, you're going to have to you know, take a buck or two less for it, even in the Southern Plains. And that's one place that you guys do haggle hard in Kansas and Texas and places like that, is they like to get all the cattle sold at one price. But on Thursday we saw 58,700 head sold, and through Thursday, including the earlier week sales in your 5-area feeding region, 80,800 head had sold, so that's quite a bit. And then on Friday we saw a little bit of cleanup trade. In the southern plains it was still mostly $1.11. In the northern plains it was a little bit less than that. So kind of lucky to get the $1.11, and especially to get it on a Thursday instead of a Friday this week. But your weighted average through Thursday on live sales was 110.63, which was a little over 30 cents lower than your weighted average from the previous week. So that goes to show that a few more of those cattle selling off the top price. Your dress trade was mostly all at 174, and that's a full buck lower than last week. But box beef cutout values, like I said, continued to drift. Your average trade for this past week on choice cuts, 202.68, down $1.62 compared to the weighted average from the previous week. Select cuts, 192.21 was the average trade. That was down 72 cents from the average from the previous week. That's a choice select spread on the average of just under $10.50, and 620 loads of cuts, grinds, and trimmings, which is about normal. But this week in your feeder cattle markets, it was a lot of pressure on there, mostly all due to weather and your lot conditions. I tell you what, it was so wet around last weekend, the previous weekend, and early last week that you just had mud everywhere, flooding in some places, and some of the places that were the driest in northern Missouri and southern Iowa, those are the places that got the biggest rains, 9 inches in some places. Places like Chillicothe, Missouri just backed up and flooding and running over the roads and places. And tell you what, a lot of guys that have these preconditioned yards, these growing yards, that starter deals where guys bring the calves in, and a lot of balling calves off of those big ranches that coming off the videos and your private treaty sales through the summer and earlier in the fall. A lot of those were delivering this week, and you don't really think about how many of those calves are ballers, but when they're having those big superior western videos, northern videos, cattle country videos, all those videos, those ones that they're having in the summer where everybody's big shotting around and just windrowing buying all those cattle, it's not that they don't know, but they're not really consciously thinking that those are all ballers. It says right on there that they sort the calves from the cows the morning that they load them. And a lot of guys think that's giving them a better way up. Well, yeah, but you've got a balling calf that's going to have some serious separation anxiety from mama as soon as he gets where he's going, and he's never been anywhere but that ranch. And you start pouring all those into these starter lots, and then you get mud on top of that, and then you got guys running around in the sales trying to buy some more cattle on the spot market, and finally it gets to a point like it did this week where those guys that are assembling those calves, they say, whoa, we can't handle any more of them. That's all the calves we can handle. We've got overflowing sick pens, we've got mud, we can't get them fed, we've got a wreck going on here, plus the temperatures are swinging, you know, 40 to 50 degrees from the low to the highs, and we've got a lot of sick cattle here and we can't take any more of them. There's always a week in October where the supply outweighs demand, and we hadn't seen the biggest of supplies, but it happened this past week, mostly due to those big deliveries coming in on top of sale barn cattle and the mud and the storms, and you got Hurricane Michael coming in on the eastern side of the state. You had slop everywhere else, and then now you start seeing the forecast talking about a weekend storm in the central plains right through Kansas, and they're looking for accumulation, and there might be some accumulation. It wouldn't be that big of a deal, but the heck of it is the ground is so warm still that most all of that is going to melt right as it falls. So that's what, more slop. And then there's going to be cool conditions, going to be a shock to those calves that's never been cold before, and just all that stuff together is very bearish for your feeder cattle market. Your real-time index on Cattle Market Central there ended the week at 152.97. That was $4.18 lower than the end of the previous week. And so that's a good idea how much lower they are. That's based on an 800-pound steer. You look, the latest available CME feeder cattle index is way up there at 158.37. Has not really seen a fall off, although it's not really current. But it's doesn't seem like it's too true right now, because that would be a pretty heck of a price, especially on the average on an 800-pound steer. But you look at your cash feeder prices for the week. Your feeders, sure, $2 to $5 lower, maybe more than that places. And then your calves, very uneven. Your long-time weaned hard calves, what few of them there are, they might have been steady to a pinch higher. But your discounts on your unweaned ballers, and we started seeing some of the heavier weights come in, some of them coming into that 700 to 900 pound index cattle, which is pushing your real-time index down and should have pushed your CME index down too. But you got a lot of those pressuring in there, and a lot more balling calves hitting the market than there are weaned calves. A lot more of them. And discounts as much as $10 a hundred or more, especially on a fat balling heifer calf. It's hard saying how much off the market what one of those would bring, especially in places where they just got too many of them. But El Reno, Oklahoma, the biggest sale in the country there. OKC West have 4,900 head there. Feeder steers were $2 to $3 lower. Feeder heifers $5 to $8 lower. I say, tell you what, sure lower, and very uneven on the calves with stiff discounts on the unweaned ballers, like I said. But we saw some other markets there that are still staying high. Valentine, Nebraska, I tell you what, those guys just never have a bad day up there. On Thursday, they had a big sale earlier in the week on Monday and sold some long-time weaned year ago fall calves that are short yearlings. And then they bring a heck of a price. But then on Thursday, they come in there with an all-calf sale, and mostly all of them all ballers, selling dang near as high as those hard weaned cattle were earlier in the week, on top of all this bearishness in the feeder cattle that we saw all week. But I tell you what, they're just living in a different world up there. But saw 76 head of 688-pound balling steer calves bring 182.75. Wow, I know a farmer feeder doesn't mind feeding a fat calf, because they figure if they've been doing good all their life, they'll still do good, and they're going to put them right on feed and pour it to them and just start finishing them out right away rather than growing them anymore. So they don't mind them. But I tell you what, you can just buy them so much cheaper somewhere else. On Wednesday, John Adams sent me a quote out of Parsons, Kansas, which I hardly ever get any information out of there, or neither does anybody else. Of course, they don't have a reporter or anything, just whatever they pay to put out. But 125 head of good black yearling steers in Parsons, Kansas, weighed 826 pounds at 156. We'd like to have them on Cattle Market Central. I welcome them to get a hold of us where we can quote them more often out of Parsons, Kansas. But on Cattle Market Central on Friday, late in the week here, you see some quotes out of Montana Livestock Auction in Ramsey, Montana. 59 head of 422-pound steers way up north bring 203. And then in Crawford, Nebraska, they had a good sale there on Friday. 95 head of 609-pound steers bring 178.25. And that's a pretty good look at your week's markets there from a Home DV auction office here in Canyon, Texas. We'll talk to you next week.